Paying taxes, this editorial discusses Finance Minister Mohammad Aurangzeb's uncompromising remarks at a retail business conference. Finance Minister Mohammad Aurangzeb's hard talk at a retail business conference on Thursday was long overdue. Or hard talk is an idiomatic expression meaning direct, uncompromising criticism. Long overdue indicates that such criticism was needed for a long time. While appreciating the retail sector's substantial contribution to employment and GDP, he nevertheless took the retailers to task for their negligible tax contribution, warning them that the country could not afford yet another boom and bust cycle. Substantial contribution refers to a significant positive impact on employment and the economy, GDP. Took the retailers to task means he reprimanded them. Negligible tax contribution implies that despite their benefits, they pay very little in taxes. Boom and bust cycle is a phrase describing economic cycles of rapid growth followed by downturns, which the country cannot sustain. Every sector must contribute to taxes. The current burden on the salaried class in manufacturing sector is unsustainable, he said, while urging the retailers to formalize their businesses and contribute to national prosperity since the time for free rides was over. Unsustainable means that the current situation cannot continue indefinitely. Formalize implies that businesses should register and operate under legal frameworks. Free rides is an idiomatic expression indicating that some have been unfairly avoiding their responsibilities. Indeed, as minister, Mr. Aurangzeb has been saying all the right things, but it is time for him to walk the talk. Walk the talk is an idiom meaning that one should back up their words with action. This criticizes the gap between his rhetoric and actual enforcement. Appealing to the good sense of tax evaders will no longer do. This suggests that gentle persuasion is ineffective against persistent tax evasion. Stronger measures are needed. The utter failure of the Federal Board of Revenue to meet the revenue target under the tax-to-GDP scheme underlines the need for harsher measures to enforce the tax laws. Utter failure emphasizes complete ineffectiveness. Tax-to-GDP scheme is a government initiative aimed at increasing tax revenues, whose failure indicates that current policies are insufficient. Retailers are not the only tax dodgers. This sentence expands the criticism to include other sectors beyond retail. Those profiting from urban real estate and the ones in the agriculture supply chain too are paying only a fraction of what is due to the system in taxes. This highlights that tax evasion is widespread, affecting sectors like urban real estate and agriculture, where entities pay much less tax than they should. Making laws does not automatically increase tax compliance. This states that simply creating laws is insufficient. Effective enforcement is necessary to ensure people pay taxes. Take the example of real estate. There are various federal and provincial levies on property transactions. However, not even a handful of people pay the exact amount that they are supposed to. The term levies refers to taxes imposed on transactions. This example illustrates the gap between legal tax obligations and actual payment, emphasizing widespread non-compliance. Even the organized industry is not paying what it owes to the national exchequer in taxes. The tax gap in the textile industry, especially at the spinning stage, is estimated by the FBR to be Rs 700 billion. Tax gap is the difference between expected and actual tax revenues. Rs 700 billion, 700 billion rupees, is a huge shortfall, particularly in the textile sector, highlighting systemic issues. The increase in agriculture tax rates will not boost revenues from this sector. It will require strict enforcement, the use of technology, and, of course, strong political will to enforce the amended law. This asserts that merely raising tax rates is ineffective without rigorous enforcement mechanisms, technological support, and resolute political commitment. After retailers, the minister must also pay a visit to his friends in the business of real estate, who are seeking amnesty for the realty sector to grow the economy and create jobs. Pay a visit is used figuratively, meaning he should confront or engage with them. Amnesty refers to a pardon for past tax evasion, which the minister criticizes as undermining revenue collection. It is time they also got a hard talk from him. This implies that those in the real estate sector deserve the same stern reprimand as the retailers. More importantly, he needs to sit down and talk to his cabinet colleagues who are pushing for such moves to get premature growth for political and personal reasons. This criticizes internal government dynamics, suggesting that some cabinet members favor short-term economic gains driven by self-interest rather than sustainable policy. That would be the hardest part of his job, but without reining in these elements in government, no reform effort can succeed. Reining in is a metaphor for controlling or curbing. This concludes that unless internal corruption and self-serving behavior are addressed, meaningful tax reform is impossible.